if you want to know what's going on in the economy, just look at the stock market because it's forward looking and the economic data is by definition rearward looking. So it's not that it doesn't have value, but the market does a pretty darn good job of pricing in what it expects to happen. It's not always right, but it's always got that forward looking as opposed to the rearward looking of most of that economic data, if that makes sense.
Oh, it makes perfect sense. And right now, the stock market's been really taking a hit. It's been very knee jerky. It's very emotional. Now, you tend to look at the bigger macro trends, right? And I believe you follow, is it a 10-month average that you like to
Yeah.
follow?
Yeah. I mean, there's a lot of ways to kind of skin a cat, if you will, as far as tracking trends. But for me, you could either use a 10-month moving average, which is just the average of the last 10 monthly closes, or you could use a 200-day, if you want to use daily data, moving average. These work out to be about the same time period. And so you're just averaging the last either 10 months or 200 days worth of data and figuring out what the average price over that period of time was. If the market's above that level, we would call that an uptrend. If the market is below that level, that's a downtrend.